And so now we're going to move over to our final session of the day. And most of the discussion so far has been kind of focused on short-term or medium-term challenges and developments with financial marketplace and the technology that supports or even drives it. But we're going to finish now with a look into the future. I started this morning by saying that it really feels to me as though the world, not just financial markets, but the world is on the verge of some fairly significant change driven by technology. I'm not altogether clear what that means for our marketplace specifically, but I'm sure things aren't going to stay the same. I'm hoping that this panel will give us some clues as to what those changes might be. Well, in terms of those sort of macro level changes, I was drawn to an article in The Economist earlier this year, which started by saying, Miami is the mecca of anti-establishment finance, or so it seemed on June the 4th and 5th, when 12,000 people clad in everything from flannel suits to festival gear descended on the world's biggest Bitcoin and blockchain conference. Well, I like a good music festival, and for several years I went straight from the ISLA conference to Glastonbury. So I started wondering, when will it be that I can do that particular journey without having to get changed first? Anyways, I digress massively. I'm now going to hand over to our moderator, Mark Faulkner, who is the co-founder of Credit Benchmark, who will introduce the panel and lead the discussion on digital markets for securities finance. I believe Mark will be asking you some polling questions, and to access those, please use the link on the right-hand side of the virtual platform. So on that note, I will now happily hand over to Mark to lead the discussion. Thank you.
Thank you, Kevin, and welcome back, young man. It's great to have you back. I tried unsuccessfully to leave the securities financing industry, and just when I thought I was out, they dragged me back in, and it seems like the same has happened to you, Kevin. Great to see you. Looking forward to catching up, and thank you very much for that kind introduction. I'm Mark Faulkner, one of the co-founders of Credit Benchmark. We're a data analytics business that focuses in the counterpart credit and QSIP level credit business. Increasingly, we're involved in the credit and capital RWA business, which is how I have found myself coming back to the securities financing industry. It's great to be here. Thank you on behalf of the organizers, the sponsors, and the audience for your time, attention, and support. Now it's time for the Digital Markets for Securities Finance a session. We have the honor of being the closing session. We have the challenge of being the closing session. I'm now going to go down the list of panelists in front of you and ask them to introduce themselves briefly, their company, and to check the technology works. Ken?
Thank you, Mark, and thanks for having me. Ken DeGiglio, CIO of EquiLend. We've been on a few panels today. For those of you who haven't seen the other panels or aren't familiar with EquiLend for some reason, we're a global provider of technology services across securities finance, both in the trade, the post-trade, the data, and the clearing space. Obviously, digital markets, or the broader topic of digital transformation, is something that we're keenly focused on. A very important topic, as Mark likes to say, something that's very in fashion these days. So EquiLend's celebrating its 20-year anniversary, but I like to tell people that EquiLend was born digital 20 years ago. We've actually recently formulated a digital transformation working group across a broad set of our clients. And I'm looking forward today to having hopefully some live questions and some healthy debate.
Thanks, Ken. Mr. Phillips, over to you, Matt.
Thank you very much, Mark. So my name's Matthew Phillips. I work for Trading Apps, worked here for about 5 years. I started off as a developer in the securities lending desk back at Daiwa a very long time ago. I've worked in many areas of the technology side of the prime services business. I look after at Trading Apps. I'm the head of delivery, and I do all projects to client support, and also get involved in COO type activities and policy making, etc., as well as cybersecurity.
Thank you, Matt. David, your turn next. Thank you.
Hi, I'm David Shone. So I look after the digital initiatives here at ISLA. So the past year has really been spent working on our common domain model efforts, as well as starting the ball rolling towards document digitization through our closed library initiative.
Thank you, David. Andy?
Thank you, Mark. Andy Wiblin. I'm the Chief Product Officer for GLMX and head of our European office. GLMX is a trading platform for the negotiation and management of securities financing trades. My background is in securities financing technology, working in development, product management, covering e-trading, full technology stack, for covering a period of around 20 years.
Thank you, sir. Mr. Wolfe?
Thanks, Mark. I'm glad to be here. I represent OCC. We're a central clearinghouse, actually the largest clearer of securities loans. We just recently announced a record volume of $130 billion on balance. I've been leading the strategic sort of roadmap of our securities lending program, as well as the development of our new DLT-based clearing system.
Thank you, sir. Now, audience, we are determined to see if we can solicit questions and thoughts from yourself. It will come as no surprise to you that the panel and I have prepared an hour of closely worded prose and fascinating debate for you. But we would love to be interrupted by you, and we have a mechanism by which you can submit questions, as you have been doing in throughout the day. What an interesting day. You've had SFTR, you've had CSDR, you've had collateral management and optimization. Some of you even had a virtual lunch, and then you drilled down into margin reform and UMR before rising to the challenge of improving the liquidity chain. And now we find ourselves at the digital markets. As one of my professors once told me, the first thing you should do when attacking a new subject is define the terms of reference. Mr. Phillips, I wonder, could you just kick us off and give us a sense of what you mean by digital markets? And we'll see if the other panelists have anything to chip in subsequently. Over to you, Matt.
Right. Okay. So a bit of a tall order, but I mean, digital markets, it's like saying car markets. It covers everything. When you think about it, it's like what transactions are taking place, what activity is taking place. It's app stores, it's online advertising, cryptocurrencies, you name it, media streaming. The digital marketplace is huge. So I think for the context of securities finance, we need to take a little bit of a step back just to see briefly where the web has got to now and where it's come from, because it started out as web 1.0, which was essentially online versions of real world companies and real world people. But it was read only. Web 2 was more read write. We had the same people involved, but we also had online businesses as well, or online only businesses as well. Companies became known as their domain name, so lastminute.com and that kind of thing. But also it was writable. So social media. People were able to get involved and actually post stuff, YouTube, Facebook, etc. So that's kind of, you know, the second iteration. I think now we're the context we're working in now, and this is where it becomes very relevant to securities finance, is that we are now into the world of Web 3.0, which is everything is connected, all devices are connected. We have meaning in the web, or they call about it in terms of like a semantic web, where people try to derive meanings from the web. It's all about data, and not just you've got like different formats, different storage formats, different languages, and you're trying to derive meaning from those. So but I think the key thing is in Web 2.0, you had this centralization of data, and power was in the hands of individuals, you know, Google, etc. And I think what's happening now is we're moving now to a more democratized space, where if such a word exists, where you have this concept of a trust-based web, where firms and individuals have verifiable identities, platforms exist that that provide connectivity and allow transactions to take place. And DLT, we're going to talk about quite a bit about that. Smart contracts, but essentially what it boils down to, and I think for security finance in particular, that yes, there's all these other activity going on, but it is this idea of economies in code, i.e. there is a marketplace that is effectively governed and regulated by the code that is written in, and I think that's where security finance come in, and these elements of tokenization, smart contracts, etc. On this Web 3.0 platform is where we are now, and where we can build all these tools we talk about.
Thank you, Matt, for picking that up. I'm reminded of the serial killer in Something About Mary, who's hitchhiking and sort of invented 4-minute abs, and somebody else 6-minute abs. Said, what could be better than that? He says 5-minute abs, and he goes crazy. And what could possibly be better than Web 3.0? Dare I say Web 4.0? But that's for another day. Panel, any thoughts on that definition? Anything you'd like to add for context before we dive into the wish list?
Mark, I guess the only thing I would elaborate on is I agree with everything Matthew said. You know, it's very technology driven. You know, you look at what's the advancements in cloud, big data, data science, AI, machine learning, all stuff that we're all working on. But I think when we look at digital transformation, sometimes we focus too much on the D and the digital part, and not enough on the T and the transformation part. And you know, when I look at our industry, I like to say that we certainly have enough analog messes lying around to clean up. So I just always try to remind people that we should, you know, re-engineer first and digitize second.
Focus on the problem statement, not on the technology.
Correct.
Okay, so
I think
thank you.
I agree with all of those points as well. I think we've defined the digital portion pretty well, but I think another key part of that is the market. So how are these advances in technology helping to better bring together lenders and borrowers, in this case, into, you know, shared places where they can have the best price discovery?
That's interesting. Well, I hope that's given the audience food for thought and makes you think that there's 50 minutes of conversation on digital markets that's going to be worth having. Gosia, I wonder if I could ask you to put up in front of the audience the wish list that we put together. Audience, as we were preparing for this session, we started talking about a variety of different things. We talked about what the panelists might be wishing for, and also the biggest issues that would be presenting themselves. And as you might imagine, there was a slight disagreement or debate that took place. And we thought that this would make a really good sort of beginning for you, the audience, to join in. Please don't feel the need, unless you feel very strongly right now, to put your vote straight away. What I'm going to do, if you don't mind, is to ask my panelists to, again, sort of define what they mean by distributed ledger technology, by a central bank issued digital coin, etc., and to maybe explain why they feel quite strongly that this might be the top wish that they would have, and that perhaps the industry might have. David, if I'd be so kind as to ask you to sort of join the discussion, what did you mean when you were talking about distributed ledger technology with the panel in preparation? And see if you can sort of solicit votes from the audience to see how they may position that as a top wish. Over to you, sir.
Sure. So look, I mean, as far as I'm concerned, the DLT, you know, the definition is an immutable record of transactions and positions, right? That's shared and distributed, obviously, from a network perspective. Really, the aim is to have a standard method of representing the contracts that we trade, positions that we have, in a way that everyone has the same view on what has occurred and in terms of what cash flows, etc., will occur, right? I guess my wish is that in 10 years' time, we're not going to be sat on a panel, and this is going to come up as we get into what we think the current issues are, talking about the fact that there are there's fragmentation in representation, or there's different versions of the truth. But in 10 years' time, we're not sat here saying the same thing about DLT, right? So that we're not saying, do you know what, there's 50 different distributed ledger networks, none of which talk to each other. So we still have a reconciliation problem, or we still have we still have an interoperability problem, or we all see things differently. I can live with 2 or 3, maybe, preferably regulator sponsored or accepted DLTs, preferably 1, but I'm not I'm not optimistic that the whole world will agree on one solution. But even, you know, regional, if you can get regional ones, that's still an improvement, right? And then that opens up the possibility of things like removing the need to regulatory report, for instance, right? Because you can have a regulator tap into one of the nodes on that network and see what's happening in real time and actually respond to the market in real time. Yeah, I mean, if you think about the crash, etc., a lot of the reason that unfolded the way it did was the timeliness of the information that regulators were getting, right? So DLT really sort of solves for kind of a common view of what's out there, and it also allows for a real-time view on that.
Thank you, sir. Mr. Phillips, you too sort of thought that this was a top wish for the market, for you, etc. Anything to add to what David said before we get on to the next wish?
I think so. I mean, I'm not going to repeat my my rant from last year about it, but you know, if we boil it down, we are the model. If we started with a blank piece of paper and said, right, we need to build some technology to support the securities finance, this newfangled securities finance business, we wouldn't do how we're doing now. So we have this situation where we take we book a trade between ourselves, and then we create 2 completely separate representations of that trade, and then we'd spend our life trying to reconcile its economic chronology. And if we took our requirements as the let's say the ISLA best practices, it just screams, you know, you need some shared solution for it. You need shared SSIs, you need shared market data, you need common reference data, you need common workflows, you need to reconcile. All these things are effectively built into the DLT technology. And so for me, and echoing what David said about particularly about regulatory reporting, it would be, I think, a solution that would get ahead of regulation. All the regulation we talked about today, SFTR, UMR, CSDR, is all reactive. It's all reacted to things that have happened in the market that have needed a response to. And I think, in my possibly very naive view, it would be good to have a system or a platform that the regulators liked. It made the market more efficient, and they said, oh, that's good. So the regulation is compliance with that kind of platform. We have transparency. If the rules need to change, we can change the code, and those code changes are very transparent to all the participants in the market. DLT definitely my biggest wish for the market, and a proper implementation of it, as David said. You know, you can have maybe 1 network per jurisdiction and domain. That's about it, I think.
Thank you, guys. So a couple of the panel have that as their top wish. We're going to go around the rest of the group shortly, and the audience, do please put your vote where you think the top wish coincides with your thinking. One of the things that I'm sort of acutely aware of, having not done a securities lending transaction for quite a while, was after the trade was made, the average loan would sit out there for, Christ knows, 3 months, and require servicing and marking to market and collateralization and substitutions and all that. Is it still roughly that level of length of time that a loan might be at? Some longer, some a lot shorter, but is there any sense from the panel how long a loan might last? That's where all the work comes in, isn't it?
Yeah, I think as you say, they're still the same. It can be days, it could be months, and you have some long loans out there with thousands of economic activities that have happened to it, and trying to reconcile those to the day and decimal point in order to accrue for the end of the month. It's still you've got billing compare, contract compare. It's the same problems.
Great. Okay, thank you. Now, Matt, I'm going to come to you, and could you just talk to the issue of the wish that you were articulating, please?
Yeah, sure. Happy to. You all sort of queued it up nicely for me. So I think it would be great to have a central bank issued digital currency or coin for a couple of reasons. It would help give the market more clear indication of regulators' perspective on crypto and digital markets, like we've been discussing. It would also help to drive towards the more common single networks, so bringing the networks together where these coins are able to move around. And that's the third reason, the velocity of being able to move. So, in today's world, we perform mark to market each night, come up with those obligations, but we don't actually settle them until the next day. And that introduces risk, especially when it's over a weekend, which is when we've traditionally seen firms go to default. So if we did have a digital coin, we could move that immediately upon mark-to-market calculation and eliminate that risk.
Matt, is it particularly important that it's either a digital coin and also central bank, created, sponsored, whatever? Is the central banking component an important part of your wish?
I would say yes. I mean, certainly there's stable coins out there that you could use as an analog, but I think having the full faith and backing of government would certainly help adoption and use of that coin.
Thank you. Those in the audience who share that wish with Matt, please do vote accordingly. Andy, I wonder if you could talk to us about the common domain model, the CDM solution that you thought would be a really top wish.
Yeah, sure. I think the point is that there has been a huge amount of innovation in our industry over the past few years, but in a highly connected ecosystem like we have, the full value of innovation is only realized if it's easy to connect the parts of the ecosystem together. And a lot of time and energy and budget is spent just building those connections, and it's often reinventions of the same wheel. There are semi-standards, there are bespoke APIs, many things that are in place to try and solve this problem. But really, it's all repetitive. And if there was something in place which allowed us to reason about trades and data flows and events off trades in a common way, then a lot of that plumbing friction would not fully disappear, but it would reduce down to a very manageable size, and that would allow the pace of adoption of some of the innovations to really kick in. And certainly, as we've been building things over the past few years, we've always got an eye on how can we connect that upstream, how can we connect that downstream, when if we had something like the common domain model adopted across vendor products, in-house systems, other bits of the ecosystem, then that would give the participants, the people who are going to benefit from the innovation, a far greater degree of choice in terms of what they use, when they use it, and how they use it.
Thank you, sir. I'm seeing, as I'm being updated, 50% at the time of I saw it were in support of a common domain model in the voting. Dare I say, Andy, before you started talking rather than after, I don't know what's happening.
Well, let's see what happens. Let's see what happens now, right?
Now, a man in search of one truth, the whole truth and nothing but the truth. Ken, I think it underpins quite a lot of what we talked about in Wishes, but maybe if you just talk about what you mean by that digital truth.
Yep, I will. Actually, when we did the prep session for the panel last week, I thought I was being unique and cute with this single source of the truth. But logging into earlier panels in the day, I think it was a theme throughout many of the panels today. So just, sticking with my protocol of leading with the problem and then trying to find a solution. This is my wish, because I think it's the root of a lot of the evils we have in our industry. I think it's mostly a post-trade problem. If we go back to your question of how long do these contracts stay out there, they stay out there for a long time, and they have many, many life cycle events. So we're dealing with an issue where people are doing multiple points of entry. They're doing that point of entry not really upstream close to the point of sale. And then you end up passing these different variations of the same data around. Then you end up doing calculations on different versions of the same data. And then worst case is compounded by the fact that people have different variations of the same calculation on different versions of the same data. So it creates a lot of operational inefficiency and leads to a lot of recon. So if I had one wish, it would be for a single source of truth. I think that interoperability, and I like to say interoperability uppercase I, is one way to solve that. I think digital ledger is an appropriate other way to solve that problem. Common domain model factors in there, but I would argue, let's care more about having that single source of truth and less about sort of which of these technologies or implementations we use to solve it.
Thank you, guys. We've actually managed to solicit a few questions from our audience, which is great. And I just wanted to share with you, the panel, the final voting. So distributed ledger technology, 10%. Central banking digital coin, 10%. Common domain solution, 40%. Tied with the truth at 40%. It's interesting. I'd have voted for Liverpool to win the Premier League with Leverton and the two Manchester City, Man United clubs being demoted. But that's just the difference between us, I suppose. Now, questions from the audience. Question one. Thank you very much, Gozia, for sending these. What are OCC's thoughts on adopting the ISLA common domain model for its DLT stock loan implementation? Asks Anon from the audience. Over to you, Matt.
Sure. Yeah, I think the common domain model is a great thing that, OCC has always embraced industry standards. For decades, we've worked with primarily in the options and futures to standardize the use of FixML. I do think that it's appropriate to consider that, as well as CDM and other standards, for implementing it into our system. We don't currently have that in the plans, but it's something we're very closely watching.
Thank you, Matt. Anybody else to chip in on that one before I go to the next question from the audience?
I just want to know how David managed to submit a question while he was on the panel.
I was just going to add, I think, I think the fixed standard and the CDM are two things that can coexist and indeed integrate, right? They have slightly different purposes, right? So let's be clear, the common domain model is not just about, it's not just a data representation, it's not just a messaging format, right? The idea is that it will actually standardize processes as well, right? Events, processes, documentation. It's a bit wider than that kind of, I guess I think of Fix as effectively an ordering messaging system, right? But those three things are massively compatible, and it's something that I know our colleagues in the ICMA have looked at for the repo side, and something that we can build on next year from an ISLA perspective.
Thanks, guys, and thank you for that question.
It really shines with the agreements. That's not something OCC gets involved with, but I think that's definitely one of the strong suits of adopting that standard for sure.
Excellent. Thank you for that question. Thank you to Paul Aspland for this question. Does digital internet connectivity not enable new strategic end-to-end processes with entities as components? Surely this must be our industry's new strategic vision and hence become the development roadmap that we are working towards. Any takers? I think the point here is it's entities as components, driven by the interconnectivity, the industry, the strategic interconnectivity that Paul is mentioning.
I do think it's an interesting, I'll take a stab at it. I do think it's an interesting question and something that as an industry, we need to think carefully about. Just as an example, there was in the press today, an announcement that Goldman was going to use digital assets to form a platform for digitizing securities. And whether we want, individual firms digitizing securities as opposed to, more traditional listing exchanges or perhaps alternative trading systems, I think is a question that we should be asking. To avoid fragmentation and many different protocols and networks out there.
Isn't that a little bit like sort of the ETF world and saying there should be an industry ETF rather than a BlackRock, a Vanguard, an SSGA? There are other providers, of course, available.
Mm-hmm. Yep.
Do we need there to be one? Well, could there not be maybe others, maybe competing ones? I mean, isn't the ETF analogy worth exploring?
Yes, for sure. If you look at it that way, you then need the marketplace for trading those securities, and that I think is the part that we don't yet have a centralized marketplace for these new emerging digital, whether it's crypto or digitized securities or what have you, NFTs. It's always about, can we bring them together?
Thank you. I have one more question now. I'm going to throw this to you, Ken, if you don't mind. Isn't DLT a perfect single source of the truth?
Yes, implemented correctly. I think somewhere just in its definition, the answer has to be yes. But I would say it's one way of getting there. I mean, I always make the argument, if we had one central database, we could solve the same problem, right? So there's a lot of good things about DLT. When you break it down into its components around tokenization and smart contracts, I think there's a lot of pieces of it that we want to use. But let's not also forget that part of the original premise of DLT is around federated trusts, and I am certainly a believer, and I believe so are other people on this panel. I'll point to the OCC that trusted intermediaries, of which EquiLend is one and the OCC is one, is still a very, very important value proposition for the industry. So I don't really think we have a federated trust issue as much as we do a single source of truth issue.
Thank you, sir. Now, what I'd like to ask Garcia to do is if you could just put up the second question that we're going to be discussing in a similar manner to the one about the wish list. I'd ask the audience, unless they feel very strongly, to hold off voting until maybe they've heard some context, some definitions, some discussion from our panel. Could I also say that prior to the call, we were told that the number of questions coming into the audience is varied, to the panel varied very much during the day. The apparent record is 10. We've taken 3. We've got 8 more to go to beat the record. So do keep those questions coming in. Not that we're competitive people in any way, shape, or form. So in preparation, we talked about the issues that were the biggest issues facing the industry, and some of them overlap, but we actually managed to come up with a slew of them. And David, you chose fragmentation, which plays to some of the things about the wish list, etc. I'm very keen to not sort of revisit ground that we may have recently covered. But over to you to see if you can solicit some votes from our audience on the subject of fragmentation being the biggest issue.
Yeah, so when I say fragmentation, I'm not talking like back in the 90s when you had to defrag your hard drive or anything like that. But it's the case with our marketplace in the same way that any industry grows up organically, that you end up with, over time, different solutions, different interpretations, organic growth, shall we say, that needs at some point to be renormalized. So like I said, we have different processes around things, we have different mappings around things, we have different representations of transactions, we have different regulators defining things differently, right? That's what I mean by fragmentation. It happens across the board. I mean, even today in this morning's panel, 1 year on in SFTR, there's still confusion over country of issuer, right? Which country do you want? Is it the headquarters or is it the domicile? That level of fragmentation is not sustainable, I would say, for the future.
Thank you, sir. Now, I'm going to ask Mr. Wolfe to talk about the challenges of legacy systems and the lack of flexibility to adapt and innovate in this industry. That might be the biggest issue, Matt. Over to you.
Yeah, exactly. It's something I'm sure we're all very familiar with. Legacy systems that aren't able to adapt and evolve with these new emerging standards. It actually is like an anchor dragging on the entire industry, stifling innovation. Whereas if we all had more flexible modern systems, we could be adapting to change much more quickly than we have been in the past.
Thank you, sir. Andy, related, I think, to that one, you were talking about the issue of the frictional cost of interacting different systems, different parties in the industry. To some extent, it overlays with both of the things we've had. But why do you think that frictional cost is one of the biggest issues?
Yeah, I think it does very much overlap with the two previous comments from Matt and David. I think, and it also links back to my wish for why should we go to the common domain model? It is stifling the pace at which people can adopt new ways of doing things. So if you think about the move, if we think about digital markets and the move away from the analog world, where things were negotiated over the phone, on chat, semi-structured data, people are now looking to initiate digitally. They're looking to auto-negotiate, auto-price, have rules-based execution. All of that can exist, and to some extent does exist, but a large part of the market are being held back from doing that because there's a high cost to bring that on board. So I think reducing that friction, from the GLMX side, we're super conscious of this, so we make every effort to reduce that friction to a minimum by offering a range of ways to connect. But ideally, the people who are connecting would have options. They'd have standards that they could rely on to be able to do this quickly and be able to make choices and quickly switch services as well. This is a free market. You don't want people to ultimately get locked in because of legacy integration.
Thank you, sir. I've just asked the administrators, and thank you for updating me. Apparently, we have 100% vote in favour of legacy systems at the moment, which is quite a shock to me. That well done, Mr. Wolfe, for picking that one. But we'll come to the others in a moment. I'm very, very keen to give us the chance to get past 10. So, question 4. Anonymous, this one. Which solution offers the most resilience against shocks or outages? CDM or the single truth? Thoughts on that, panel? Anybody want to pick that one up?
I think there's a slight comparing of apples and pears there, right? So to me, the CDM is a method of defining standard representations and processes, etc., which can be used to build smart contracts on a DLT, which offers a single source of truth, or used to build the one single database, whatever that solution for a single source of truth is, right? It's not an application. So it's not like the CDM runs in real time. It's data. It's data based. Whereas, clearly a distributed ledger, part of the proposed, part of the proposed reason for using it is that it is distributed, and you have a copy of the data in more than one place, and therefore, in theory, is more resilient. I wouldn't call it perfect, like in the previous question. I'd be very careful about using the word perfect in any way, shape, or form. But I think that basically my view is that comparing two slightly different things.
Thank you. So I'm moving on to question 5. This is specifically asked of you, Ken, but there are other vendor solutions available. Would Aqualand seek to build its own DLT protocol as part of its technology stack? Or would it look to partner with a vendor in the space with the existing expertise?
This is a question that the working group that we put together has been sort of asking us and asking themselves. We've started again with a problem statement and a use case that we'd like to think about solutioning for. We're zoning in on the use case of avoiding reconciliation, which is not a surprise to the people on this panel or the audience, I'm guessing. But I think this ends, would we be open to EquiLend building a product to solution for avoiding reconciliation? Of course we would. But we've had open conversations about maybe just driving a POC, maybe doing an open source project, which we could lead and potentially host a node for. So I think it could end up with us having anything from just open architecture, open source collaboration to building a product ourselves. But no matter which path we go down, I think the position of EquiLend and the working group is, we wouldn't go reinvent the wheel. So we're not going to build a new fabric. There are plenty of fabrics, whether it's Ethereum or Hyperledger or other to choose from. There are plenty of smart contract vendors out there and tokenization vendors. So we'd likely lever those existing vendors, certainly a fabric, to do something either ourselves or along with the industry and the working group.
Thank you, sir. Anybody else got any thoughts on that and in terms of their approach?
I'm just wondering which vendor asked that question of EquiLend that currently have a expertise in that space.
I'm afraid the questioner was anonymous. I'm keen to move on to question 6 because with 19 minutes left, that means we only need 5 more questions from the audience to beat the record for the day. Not that we're competitive. Digitization and the smarter, more efficient workflows that it will provide is increasingly replacing a lot of the very process-driven, operationally intensive practices that securities finance market was built upon. Are the old days gone forever?
I'll take that one.
You're too young, sir. You're too young.
No, I was there. No, but they should be. It's not interesting work. Reconciling thousands of trades every day. We need to move on, and the people should be focusing on the value add. All the GC trades, should be just Bob's your uncle, just go through every day, and completely frictionless. We talked about friction, and then we focus on the niche stuff, on the high touch trading.
Yeah.
Thank you, sir.
Sorry, just to add. When you say the old ways are gone forever, I think when people think about digital transformation, they sometimes think about the machines taking over, and certainly replacing manual repetitive processes with automation is a good thing, but that exists in order to allow relationships to be enriched. So this is a relationship-driven industry, and what you're really doing with digital transformation is providing the tool or the toolkit to allow those relationships to be made better, whether that's avoiding having to bang in voice tickets, reconciliations, finding breaks, or providing contextual data to help build better relationships. I think that's the thing from the old. The relationship is still there. It's just enriched.
Thank you.
Do you mind if I jump in as well? Just
of course, go ahead.
Obviously, there's more than a hint of nostalgia there, and I don't want to insult whoever sent the question in, but nostalgia is really resistance to change, right? So it's one of those things that's holding back quick progress in that area. If you take a sort of a retail equivalent, if you've opened a bank account with any of the digital banks or tried to get a loan, or if you've done any of that kind of thing, the new KYC processes, for instance, that you can basically sign up, get an account, have it all approved, etc., within minutes using essentially your smartphone, right? I'm not saying that, I'm not suggesting that CEOs of institutions start sending their photographs as part of the KYC process, but you get what I mean, right? It's taken the pain out of that. Do you want to go back to having to go into a branch and sit down with a manager? No, right?
I love the idea of nostalgia driving questions on a digital transformation session. Far be it from me to want to send in questions to get past 10. I still remember the days when the errant fax was a big problem in the industry, where an entire book of business would be faxed to the wrong person or the wrong company, and you'd work out who was doing what at what rates that you weren't getting and all of this kind of stuff. And it was relationship threateningly bad that someone had just pressed the wrong speed dial on their fax machine. Remember those. Now, going back to our issues, Ken, if I could ask you to deal with the one that you sort of picked up on and want to tease out. I'm very keen to talk about the regulatory divergence, the regulatory driven divergence of the lack of interoperability, which we've covered quite a bit, but you were particularly at pains to sort of mention exacerbated by the regulatory divergence that we're seeing.
Well, look, I think I brought that up in the some of the prep sessions because, you know, I opened with, we've been around for 20 years and we're a fintech, but I also have the pleasure of being a highly regulated broker dealer, ATS and MTF, and that comes with a lot of work and a lot of cost. You know, if you just look at what's happened mostly in Europe, but internationally over the last couple of years with Brexit and SFTR and now CSDR and UMR on the horizon, doing digital transformation is hard enough when we're fragmented, but having sort of fragmented regulations across different jurisdictions just makes the problem even more complex than it already is. So I think that does exasperate it. You know, David led with fragmentation, coming at it from interoperability. I think we're really saying the same thing. I don't think fragmentation in and of itself is the problem, though. You know, fragmentation, you can argue, is going to drive competition and it's going to drive innovation. I think it's the unintended consequences of that fragmentation and not having a way to bring it all together into the single source of truth is really what the biggest issue is. So we're fragmented across vendors, across venues, across post-trade, and across regulatory jurisdictions. So I do find all that to be a very gating effect to innovation. I think what we'll see is more collaboration, more competition. You know, I like to call it co-opetition. I think we'll see a lot more co-opetition going forward, whether that's in the form of mutualizations, partnerships, flow providers, more consolidation and acquisitions across the industry, which seems to also be in fashion these days. So we need to we need to let the fragmentation happen, but solve it with either interoperability or some other solution.
Thank you, sir. Mr. Phillips, you sort of took a slightly different path in terms of the big issues and talked about cybercrime and risk management being the issues that you thought the industry should be one of many issues, but you thought one of the big issues. What were you thinking there, sir?
Sure. So, I mean, so cybersecurity, cybercrime, there's obviously the direct impact of that. So I don't know if you've heard the expression, but every barbarian is at every gate as far as cybercrime is concerned. Your routers are constantly being scanned. I didn't know certain countries had so much of an interest in the securities finance industry, but yeah. So that's it drags a lot of expense, a lot of IT resources, a lot of resources are dedicated to combating that, to solving for that. But also, I think in this context, there is the indirect impact. So we've talked about needing to be more connected, interoperable, more collaboration. use of common workflows, common tools. To do that, you need to connect up. You need to have all the organizations. You possibly need to move into, have hybrid cloud computing on premise. Firewalls need to be opened up, and heaven forbid you need to let some of your data off the farm. It has to be, and some of that may be client data. And so what we're seeing is the actual due diligence and questionnaires that you go through in order to put a product that connects people together, that requires opening those firewalls together, that it's gone up exponentially in terms of the amount of time and the amount of involvement in that due diligence process. 5 years ago, we'd be asked the question, do you have antivirus? Do you have a DR solution? Now it's tabs and tabs on a spreadsheet covering the hardware, covering the your providers, your subcontractors, and it really, what it does boil down to is what is your cybersecurity profile. And that, I think, that process, particularly when you're dealing with multiple counterparties, if you're trying to put like a network together and that kind of, you're having to follow that due diligence process in each individual firm, and they all have different ones. And we're very interested in this feature, and so I think that in order to be able to adopt all these tools that we've talked about and all these things, that's a really major drag. That's the friction on the actual process itself of adoption.
Thank you, Matt. You're all winners to me, as the primary school teachers tell our children when they were in primary school. However, there were only two issues that the industry or the audience identified. 71% clear leader, legacy systems. The only other issue to take a vote, the lack of interoperability. That's really interesting. Time to junk some of the old systems and move forward. I'm also delighted to say that I've got 3 questions. In response, as you were talking, sir, 62% legacy systems, 25% lack of interoperability. You're a persuasive man, Mr. Phillips. 13% cyber security, and it's not bad. That might be 1.4 people. I have no idea, but there we go.
The poll open a little bit longer.
Well, let's just see. Let's move on. I'd rather be a reader than a thinker. So, question 7. Only 4 more left. Given the recent focus on the environment with COP26, how green is the DLT solution compared to the existing or any other solutions? How can we evaluate the greenness of some of the tech we're talking about, gentlemen? Any thoughts?
Well, I think you have to make a distinction there between some of the public DLT systems like the Bitcoin blockchain versus private permissioned networks. Certainly within the private permissions network, you don't have that extensive computational challenge to reach consensus. So the environmental impact of a private network, I would say, is no different than any other system. But yes, again, certainly there is an impact of the public blockchains.
Yeah, I mean, I think it depends on what the protocol is, right? Mm-hmm. Proof of stake is greener than proof of work, for instance, right? Yep. There's also large energy excesses in certain parts of the world grid that gets dumped anyway. So there's multiple viewpoints.
Thank you, sir. I just make the point that people remember the most questions asked per panel, not the answers given. I'm kidding with you, David. But question 9, actually question 8, sorry, any of those listening, no, I didn't skip one. Regulations define the legal/essential elements of steps that we have to achieve to operate. Should regulators have to approve DLT or digital processes and workflows, thus approving the design rather than specific transactions that take place? Should the regulators be invited in to be looking at the solutions, the workflow technological solutions as they're being developed, and therefore perhaps endorse them as they become acceptable? Thoughts?
I would say yes, for sure. As a systemically important financial market utility, it's critical that OCC be resilient and not introduce things that materially increase or change the risks that we face. So I think, from that perspective, having the regulators' perspective and approval on these technologies is important.
I mean, I would also agree, but Mark, I'll go back to the way that you put it. Should they be invited in? Yeah, I think they need to be involved, but I'd love that they do it with us rather than to us.
Yes, yes. And there's a vein of thinking here. Question 9. Innovation needs to be supported by legal and regulations. Are we putting enough energy in this part of innovation, or is the emphasis perhaps too much upon technology? Related theme there, isn't it? Someone's obviously been thinking about the way in which the regulatory legal structure can impact and be part of the necessary growth of the workflow and the systems that are used by an industry. Is there too much tech talk and not enough regulation, or is the balance right? It'd be interesting to hear your thoughts.
I think I'd come back to the point I made earlier. We've had to invent a technology, SFTR type reporting, communication in response to regulation. It would be good to have it the other way around, and technology building the frameworks that we use that are then approved by the regulators and seen as a good thing. I think that's a better way round to approach it proactively.
Thank you. That's question 9. We've got 2 more to come.
Just one more note there. If you think back to the biggest problems that we just covered, those are technology problems. Those aren't legal problems. Legacy systems, fragmentation, interoperability, and cybercrime. Those are definitely tech, not legal. So I think we are looking at the right.
You're focusing on the right. Yeah, we're solving the right part of the problem. But if there were to be contractual problems, regulatory enforceability problems between banks dealing with broker dealers or asset managers or funds, then the emphasis would change. Is that your point, Matt?
Yeah, I mean, those are certainly other challenges. I was just meaning the greatest challenges that face us today are more technology in nature and less legal in nature.
Got it. Okay. Now, I'm conscious that it's been a long day for our audience, and I'm encouraging Mr. Minotti to start blowing his tech clean and his Zoom interaction getting ready. I'd really like to thank our panel. It's been a great hour of conversation. Never easy to come at the end of a day, never easy to be the 3rd, 4th, or 5th person to discuss a topic, but I hope the audience got a broad range of views and perspective. We cannot thank you enough for your engagement with us. Thank you. We nearly got there. We got to 9 questions. Next year, we'll see if we can do better.
Silver medal.
I don't know. But I just want to say to my panel, to the audience, to the sponsors and the organizers, thank you so much for giving us the opportunity to take an hour of time with you. We know time is very precious, and thank you very much. I'd like to, I don't know if you applaud in this kind of strange world, Kevin. What I'm looking to you. What do people do at the end of their sessions? High fives?
I think we do this. I'm not quite sure, Mark. I'm not sure what the convention is.
Glad hands.
I think we need a convention for how.
I really appreciate it.
Thank you.
Thank you also, Mark. It was nice to be invited to interrupt the last panel. That's the first time that's happened today, so I appreciate that. That was a great discussion. I'm sure actually we could have let that go on a lot longer, and there'd have been lots more to talk about it. I certainly found it very interesting. It's great to get that, you know, a glimpse into the future. Clearly, it's not entirely clear how things are going to develop in our market in terms of the developing technologies, but I think we got some good food for thought there. So at this point, it's just left to me to basically close out the day. And I hope that you all enjoyed today's events and that you learned some new things. I certainly did. I mentioned at the beginning that all of the sessions today have been recorded, and they'll be available on the virtual platform to replay as and when you would like. I know Mark started doing my job at the end there, but I'd like to thank the speakers today, the sponsors for their support of the event, and Justin at the team at Securities Finance Times. I'd also like to thank the team at Event Rock, who behind the scenes make sure that these sorts of events go flawlessly, which this did. And most importantly, I'd like to thank you, the audience, who many of you I know have been with us all day today, and that's been great. So thank you for that. Maybe next year we might get to do this in person. That would be nice. In the meantime, I hope to catch up with some of you in the near future. And on that note, it's just down to me to say goodbye and see you all again soon. Bye now.